Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate America and sometimes find out if a company is just trying to pull a fast one on us. Today we're looking at SharpLink Gaming, and it seems like they had a meeting with their shareholders and it wasn't quite as straightforward as they might have hoped. So what exactly is this document? Think of it as an update or a correction to a company's earlier report. In this case, SharpLink Gaming is filing an amendment to a report they already sent out. Why the update? Well, it's all about the results of a special meeting where shareholders got to vote on some important company decisions. This particular filing gives us the final official word on those votes straight from a certified inspector. The main event here happened on July 24th, 2025. This was a special meeting, and SharpLink Gaming, which is involved in gaming, and likely some kind of technology related to it, had a couple of big proposals for their shareholders to consider. Now, to understand the votes, we need to know what type of company SharpLink Gaming is. They have common stock trading on the NASDAQ, which is a major stock exchange. This means they are a publicly traded company, and when shareholders vote, it's a pretty big deal for how the company is run. The company itself explains it clearly. They had a special meeting on July 24th, 2025 to talk about preliminary results. This amendment is to show the final certified voting results. It's like getting the official tally after the votes are all counted and double-checked. This section is where we get into the nitty-gritty of what the shareholders actually voted on. The meeting was held virtually, which is common nowadays. To have a valid meeting, a certain number of shares need to be represented, either in person or by proxy. Out of over 62 million shares that could have been voted, about 35 million were represented at the meeting. This is about 56% of the total voting power, which is good because it means they had enough shareholder participation. A quorum to make the votes efficient, a quorum to make the votes official. Without enough people voting, nothing decided at the meeting would be legitimate. So what were these crucial votes about? There were two main things on the ballot. The first proposal was about increasing the number of shares the company is allowed to create. Think of a company's authorized shares, like the total number of pizza slices it has permission to make. Sometimes a company runs out of these authorized slices, and if they want to make more, perhaps to sell to investors or to use for employee stock options, they need shareholder approval to increase that limit. This is a pretty common governance thing. The second proposal was to approve a new plan for giving out stock and stock options to employees, often called an equity incentive plan. This is a way for companies to reward their employees and keep them motivated by giving them a stake in the company's success. If the company does well and the stock price goes up, the employees who receive these incentives also benefit. Now for the voting results. For Proposal 1 to increase the authorized shares, the numbers are pretty clear. A massive majority voted for this. Over 34.6 million shares were in favour, with only about 406,000 against. This means the shareholders overwhelmingly agreed to give the company more flexibility to issue more stock in the future. This can be a good sign if the company has plans for growth that require raising more capital or using stock for acquisitions. So yes, this proposal passed with flying colours. Now the company can create more shares if they need to. Next up is the equity incentive plan. This is where it gets a little more interesting. Here, while more people voted for it than against it, about 19 million shares for versus 187,000 against, there's a significant chunk labelled broker non-votes, which is almost 14.7 million shares. Broker non-votes happen when a broker holds shares for a client, but the client hasn't given specific instructions on how to vote for a particular proposal. In many cases, these shares aren't counted as voting either for or against a proposal. In many cases, these shares aren't counted as voting either for or against a proposal. Even with the broker non-votes, the plan was approved because enough shares were voted in favour to meet the required threshold. However, that large number of broker non-votes for the incentive plan is something to watch. It could mean that a large portion of shareholders are either not engaged or perhaps a bit unsure about the specifics of the incentive plan itself. It's a vote of approval, but not as strong a consensus as the first proposal given the non-votes. And finally, we have the signatures confirming that this report is official. Rob Fithian, the Chief Executive Officer, signed off on July 28, 2025, confirming these are the results. Looking at SharpLink Gaming, they are in a dynamic industry. Gaming, whether it's the video game kind or perhaps some other form of betting or chance, is often driven by technology and user engagement. The decision to increase authorized shares might signal an intention to fund future growth opportunities, perhaps through new technology development, market expansion, or even acquiring other companies. The approval of the equity incentive plan is standard practice to attract and retain talent, which is crucial in the fast-paced tech and gaming sectors. However, that large number of broker non-votes on the incentive plan is a subtle red flag. It could indicate that a significant portion of the company's shares are held by investors who are not actively participating in voting on these matters. While it didn't prevent the plan from passing, if many shareholders are disengaged, it might make it harder to pass future important proposals that require higher levels of shareholder support. It also means that while the executive team and engaged shareholders approved the plan, a large chunk of the ownership base is essentially saying we're not taking a side on how employees are compensated with stock. This could be seen as a lack of conviction from those beneficial holders of the shares. In essence, SharpLink Gaming got shareholder approval for key strategic moves, which is generally positive. They've secured the ability to issue more stock, which offers financial flexibility. They also got their employee incentive plan approved, which is good for talent management. But the devil is in the details, and the significant number of broker non-votes on the incentive plan suggests that shareholder engagement might not be as universal as a company would ideally want for all types of decisions. Alright, that's our breakdown of SharpLink Gaming's shareholder meeting results. What do you think about this filing, particularly those broker non-votes, and what they might signal for the company's future engagement with its investors? Let us know your thoughts in the comments below. If you found this analysis helpful, give this video a like and make sure to subscribe for more decoded corporate insights. And don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you in the next one.